What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SoFi stock, and we have been taking a little bit of time off YouTube. I believe exactly around 2 months. So, guys, there's a lot to talk about. I put myself, away from YouTube and just let SoFi and the overall market take its course. But now it's time to cover some things that have happened. And, it has been a continuous tough time for the SoFi stock, but I believe the stock itself is not exactly telling the true story about the company, which I believe is just now starting to blossom out of that ugly, unprofitable SPAC stage into a profitable, growing, potentially, a top 10 bank in the next, 5, 10 years or something like that. I believe the story is just now getting started. The company is, getting better on their debt obligations, refinancing some of that bad debt that we saw in the convertible note, and just continues to make moves so that they can be a long time player, in this financial market. And guys, SoFi, I believe, on the second half of 2024 is going to have to get back into growth mode to hit, some of these numbers that they are putting out, okay? Q1 and Q2 was just a cool off mode, just, cruising on lending, lower, lending volume originations, and pretty much you're going to see the company have to kick it up a notch somewhere in the second half of 2024, whether that's financial services, Galileo technology platform, or even lending, comes back a little bit, but they're going to have to find some growth somewhere just to see these, revenue comp jumps in Q3, Q4. So don't be expecting nothing crazy for Q2. We know this is just one of those cruise along quarters. We really need to see what SoFi is going to say, what's going to truly happen in Q3, Q4. And guys, SoFi, once again, the investors, got absolutely hammered again. It took us about 60 days to shake off that convertible note deal. It took about 60 days, 2 months. We were starting to make our way, out of that slump. And then we got the SoFi curse, guys. A long-term, 7-year institution. I forgot their name. Sold out 100 million bucks or whatever, 100 million shares, and that's what's gonna happen, guys. It's gonna, really take a hammer on the stock, and now that's taking a, probably gonna be a month, to get out of that little slump. So pretty much the entire Q1 to Q2 was just absolutely pain. Nothing happened, and that's why we're back at these levels in the $6 range. But guys, today SoFi has announced earnings. We got earnings coming up on the 30th, I believe. So we're literally about a month away. It's going to come really, really quickly. And hopefully, once again, the SoFi management gives us some good news for the back end of the year where this growth is going to be coming from, okay? Your X factor right now, of course, no matter, how much profit SoFi turns, how good lending, the banking does, your X factor is Galileo waking up, to new growth levels, okay? I know the management put out, 20, 25% compounded growth. We need to see that in the 30, 40% range, to get like that SaaS multiple for the banking industry, okay? We need 30 to 40% growth, okay? The 20% growth, the next 3 to 5 years, that's not going to do it, okay? They really need to see this story blossom, and that's your X factor. That's where you're going to make all your money with the hybrid multiple. Right now, SoFi does about Galileo, does about 400 million annual recurring, revenue on where they're at right now, about $100 million. We need to see that go to, 200 million quarterly, 500 million quarterly, to get to 1 billion, 2 billion revenue, really good margins. It's just, they need to really pick up in that sector, and then you're going to see a hybrid multiple for SoFi. But right now, we really need to just knock this Q2 out and see where the story is going to take us on the back half of the year. So I really haven't been making a lot of YouTube videos because, guys, it's been a rough market for fintech. You can see the VC funding for fintech is at like a 5-year low. Nobody's going public right now. Everyone's just hiding in the private markets because they know their valuations are getting, sliced up 20, 30, 40%. And until you see some rate cuts, some VC funding coming back, you're going to see these companies' valuations still continue to be suppressed. And what you need right now for SoFi is just continuing to clean up the balance sheet and continue to slowly grow profits until it's time to get back in that growth mode. And we know where growth mode is really going to come from. If it's not going to come from Galileo, guys, it's going to come from mortgages, and it's going to also come from student loans and personal loans. And they're going to really get back into those sectors, if interest rates do come down in the back half of 2024. We get one rate cut, and then we potentially get another 2 rate cuts in 2025. 2025 could be looking like 30-35% growth potentially if SoFi, really gets back into that lending segment. It continues to grow the overall business, guys. We're gonna be looking at some really, really good numbers. We'll also look at, where the company's trading at right now at the PE ratio level. I mean, the company is looking pretty good for the growth that they're putting up right now. It's not some crazy AMD PE multiple 2, 3, 400x. We're looking at like the 39x range right now, which is not bad at all for what SoFi is going through, especially in this fintech market. So really feels good to be back, guys. Sorry it took off so long, but you didn't miss anything. Don't worry at all the last 2 quarters. And I'm not one of those YouTubers out there that just make SoFi videos, for views and money. Guys, I got my own business. I was really focused on that, so I'm not here making these videos for BS reasons. I'm actually invested in this company. I believe in this company, and they are actually doing what they need to do. The stock is just not falling where the company is at right now. The company continues to improve, and they're getting out of that unprofitable SPAC route that they went early on. So guys, let's get into the video, and it's gonna be a really good one. Be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're gonna be keeping you updated in this month of July. Let's get into it. All right, guys, here's the big news today. This is why I'm getting back in the YouTube momentum, because things are gonna start to get exciting very, very soon. You can see today SoFi announced the earnings for Q2 2024, July 30th, guys. So we are under the 1-month countdown, 29 days away. Very exciting times. We got 4 weeks. We got one CPI, a report, I believe, on the 11th or 13th. And if we get a good CPI report, probability of interest rates are going to continue to rise if we see that inflation come down. So that's exactly what we want to see. And maybe by the end of Q3, we'll potentially get a rate cut. And then you'll see, SoFi go after that mortgage and student loan industry once again. All right, guys, I've been monitoring, the call options, put options, open interest. And you can see we got the next couple of weeks coming up for SoFi. July 5th, July 12th, and July the 26th. So you can see, guys, for calls, we're cruising the next 2 weeks. Not nothing crazy. And then this is that week I said on another tweet about a month ago. I said, hey, when we get by July 19th, you can see the stock really rip. And you can see just the open interest is absolutely insane on the 19th. 258,000 calls. And then it goes right back down to 24,000, 30,000, and 1,000. So this is the big week we really need to get by. I wouldn't be buying any short-term call options until we really surpass this date in the next 3 weeks. But you can see this week they might let us move up 2, 3, 4, and then next week 2-3% or something like that. But this is the big one that I'm really watching, July 19th, and then you got earnings 10 days later on the 30th. They're not going to pay these out, guys. All right, guys, now let's take a look at some good news. What we had after the Q1 earnings, guys. The business has really changed dramatically on just fundamentals, balance sheet, risk tolerance, and stuff like that. Just look at the difference you get in 12 months on just cash and debt, guys, okay? Especially after they did the, the refinancing convertible note. Look at this, guys. Q1 2023, they had 2.5 billion cash. Debt was at 6.1 billion. There were some YouTubers calling me out on this when I told everyone specifically that the faster the deposits grow, the more you get those, that borrowed money is going to continue to run off the debt. And that's exactly what happened, as we saw the last 4 quarters of deposits just absolutely skyrocketing, guys. Look at this. Cash went up to 3.7 billion, which is a 1.2 billion improvement. But look at the debt, guys. $3.2 billion decrease to 2.9 billion. And I believe this is a number you can see drop the next 2-3 quarters, potentially to around, a billion, billion and a half or something like that, guys. I think debt's going to continue to fall if they continue to grow deposits, and this company might even grow their cash. I mean, imagine when we get this company to 5 billion cash and a billion debt, okay? The whole story is going to look a lot different, especially when you get a company growing 20, 25, 30%, with a, nice cash to debt ratio like that. And here's a tweet I put out about a week ago, guys. Sit back and relax. SoFi is looking to slap on some massive revenue quarter-over-quarter jumps for Q3 and Q4. If the revenue guidance increases comes in very similar to the next 2 quarters as they did in Q1, they will increase revenue full year by an additional 25 million for Q2, an additional 25 million for Q3. That brings full year revenue up to 2.48 billion. Take a look at the Q3 and Q4 numbers to hit this revenue mark, guys. Like I said in the beginning of the video, SoFi is really going to have to turn it on for Q3 and Q4 just to hit 20% revenue growth, because Q1 and Q2 are just such cruise control quarters, guys, because they backed off lending so aggressively and shifted the overall revenue to financial services and tech platform, guys. They're going to really have to find these big jumps coming from somewhere. So look at this, guys. 581 Q1, and then I said 590 for Q2. We're back to doing exactly what we did last year in 2023. 40 million jump for Q2 to Q3, and then a 50 million jump Q3 to Q4, guys, and that gets you to 20% revenue growth. So maybe SoFi is eyeing a rate cut, and they're going to really pack it on in Q3, Q4. I mean, technically, we're entering Q3 right now, so maybe they're going to take a shot at mortgages and more personal loan originations. I don't know, but the growth is going to have to come from somewhere, or maybe it's going to come from Galileo. That's the thing. We don't know. We need to see what happened for Q2 and what the guidance is going to be. But as you guys can see, Q1 and Q2, there's nothing to get excited for this upcoming quarter. It's what the story is going to show for the back half of the year. Right now, SoFi is just playing it really, really safe and conservative. A lot of people don't want to see that, but hey, it's easier to beat your comps when you get back into growth mode, when the year is a lot easier. You don't want these absolutely insane comps to be, and then your 2025 revenue growth is 5, 10, or even negative because you're going so aggressive. So I believe they're gonna have some pretty easy comps Q4 or 2024 to 2025, and you can see this is exactly what they did on the guidance. They jumped the revenue growth up from 14 to 16% to 15 to 17%. If you see that same type of guidance increase, 25 million, you're gonna get to 18, 19, and then 19, 20 by the end of the year. Hopefully they beat that. We see 21 to 22% growth by the end of the year. That's nothing I'm gonna be complaining about, because you got a lot of other companies out there that are not even growing this year for 2024 because they can't beat their 2023 comps. Let me show you that real quick. I did a tweet on that. Just look at this, guys. This is some of the bigger names you see in the market. These higher growth companies, but just look at the 2024 comps. Enphase, negative 36% growth. Lending Club, negative 36% growth. Upstart, negative 4% growth. You're seeing Tesla, absolutely skyrocket today. But look, guys, plus 2% growth, 2024, guys. Right now, SoFi is one of the companies that is playing it much safer 2023 to 2024, and they're having some of the best revenue growth numbers compared to these other companies. Imagine if they get back in growth mode next year and we're growing at 30%, and expanding EBITDA, expanding margins, expanding net income. There's nothing to complain about right now. The only thing to complain about is Q1 and Q2 was, cruise control, just getting by. But guys, I'm telling you, Q3 and Q4, SoFi is really gonna have to put up some numbers to, hit these types of revenue growth numbers. So something's gonna happen in the back half of the year. I'm hoping, it's Galileo, of course, but hey, it could come from other directions in the business as well. All right, guys, take a look at this. Okay, you're seeing a lot of these, AI companies and these other, crypto companies, tech companies absolutely explode. SaaS companies, 100, 200, 300x PE ratios. I said don't listen to the bears, stick to second grade math. SoFi is guiding for 175 million net income. The market cap 6.9 billion today or something like that. The 2024 PE ratio is 39x right now. Looks expensive if the company were to grow typical EPS range 5 to 15% per year. But the good thing is SoFi is expecting to grow 800% EPS over the next 3 years. Unprofitable 2023 to an $800 million jump in 2026. I also think SoFi will increase net income to the range of 200 to 225 million by the year end. Just like the slide we saw before with the revenue jumps of 25 million, they're going to do the same thing with net income. Take the high end of 225 million, you have a forward PE of 30x. Guys, I'm telling you right now, that is not that expensive right now. You got some of these other companies that are more established that have been around for decades, like a Microsoft, an Apple, Google right now. These companies are trading at 4 P's of 40, literally the exact same as SoFi right now. And Apple's putting up 2% growth. Okay, so just think about that right now. We're trading at some of these legacy top 5 mega caps right now, 30, 40 PE ratios, and we're expecting to grow compounded 25, 30% in the next 3 years, 3 to 5 years. So right now SoFi is significantly undervalued. If they can get Galileo rolling as well, the company could definitely see that crazy PE expansion that you see into some of these other AI names, semiconductor names where you see the P explode to 2, 3, 400x, and then it gradually comes down over the next 2 to 3 years to something more realistic, like a 30, 40, or something like that. So right now, guys, this is the PE ratio, the forward, and it's nothing crazy. It's not 1,000. It's not 500. This is pretty realistic on where the company is at right now. So guys, take a look at this. SoFi is officially 91 days away from not one, not two, not three, but 4 quarters in a row of profitability. The time is flying. Our little fintech is growing up to be big and responsible. So guys, in the next 30 days, you're going to get the Q2 earnings, which will bring us to 3 quarters of profitability. But also in 90 more days, you'll get 4 quarters in a row of profitability because they were profitable Q4 2023. And then, the only thing, left to get into the S&P 500 is you need a market cap of around $15 to $18 billion. So the stock price with a billion shares would be around $15 to $18. So let's say SoFi, creeps its way up end of the year, beginning of the year to $15. 4 quarters of profitability. Hey, they're up for S&P 500 inclusion. So that's exactly what I believe the management is aiming for. And of course, they get those big bonuses at the $25 mark. And if SoFi goes into the S&P 500 by the end of 2025, hey, they still have an opportunity to reach those numbers of hitting their goals of 2026 is when the expiration of their big investment bonuses happen, $25 to $45. So maybe that's SoFi's goal, to get into the S&P 500 in 2025 and see people, FOMO in, and boom, they cash out $25 to $45 and call it a day. If you made it to the video, I want to say I really do appreciate it. I enjoyed doing this video for you. I'm going to be doing more videos for you in the future. Be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. Once again, my name is Kyle. Hope you have a great day.